please take into consideration the risk to reward ratios, the risk management and everything. And actually, again, the other thing that I want you guys to actually take into consideration is the lot size that you're using. So right now we are in a bit of a, as we know, like it's a bit of a challenging market. So we need to make sure that we reduce our lot sizes in order to have less risk, right? So now looking at the USD. So right now today, what I just want to show you is that I want to show you how to link or how to trade the USDCAD. So remember that right now when you're trading the USDCAD, you've got the USD and then you got the CAD, right? So the USD, it's a base currency. These are simple stuff. The CAD, it's a code currency, right? So if the USD is a base currency, right? And then therefore we know that it has a positive correlation with the DXY, right? And then the CAD, it's a code currency. That means it has a positive correlation with the US oil, right? So basically what happens is that the US oil and the DXY, they do affect the movements of the CAD and the USD, right? So they affect it in a positive, the positive manner. They've got a positive correlation with the CAD, right? And then the US oil has a positive correlation with the Canadian dollar, and the DXY has a positive correlation with the USD. So CAD, it's a commodity driven currency, right? So because the reason why it's a commodity driven currency is that Canada is one of the largest producers of oil, right? And they export around 2 billion barrels to 2 million barrels, I think it's around 2 million barrels, $1 million or million barrels per day to the US, right? So those are the things that like are very basic, and I feel like most people should know them. So therefore, if I'm trading the Canadian dollar, that means I need to take into consideration the US oil. And then if I'm trading the DXY, if I'm trading the USD, I have to take into consideration the DXY as well. So okay, so now this is where we are currently on the USD. We have that double top, right? For me, I'll view this as a potential double top. So it can be a potential double top, because I understand that the reason why the market had to push to the upside again, irrespective of whether this is volatility created by what, but again, let's look at it in terms of this. Remember that in the market, each and every tail that gets created or a wick that gets created, at some point it will get filled. So if you want to see, for example, this is one of it. After the tail was created, the market dipped lower, at least filled 50% of it, of that tail. So market came and filled the 50% of that tail. So the market will always try to fill the tails. That's the one thing that you need to take into consideration, right? So even here, even though the market didn't fill the tails, but like in most cases, the tails will get filled if they are long. So right now I understand that the tail actually got filled. So I'll be looking for potential shorting position on this pair. So because I understand that is a potential double top, right? So, but again, before I can make any decision, I have to go to the DXY, right? So when I get to DXY, because I know that DXY has a positive correlation with the USD, that means I'll be looking for the same thing. So I have a potential double top, and the market has a potential to push to the downside. So that's another thing that I see. So if I'm looking for short positions on the DXY, therefore I have to start looking for short position on the USD, because if the dollar has a positive correlation with the dollar, if the dollar index has a positive correlation with the dollar, right, that means I have to see a decline in value of the dollar when the DXY also decline in value as well. So now, because I understand this, then now brings me back to the US oil, because I need to understand the Canadian dollar as well as I am trading it. So those are the things that you have to take into consideration, right? So when it comes to the USD, so we see we've got a push to the downside. I think maybe one of the things that you can do is that you can also do this, because I know you guys use trend lines. But in most cases, this is something that you can do. So it rejected this level of support. So for me, I'll be looking at it in terms of the retest of the supply zone. So the market did spike to the downside in order to retest the monthly supply zone, the monthly demand zone. So the spike into the monthly demand zone, that's why I'm starting to consider taking long positions on this pair. So now you see, I'm looking for price to push to the upside on the US oil. So if I'm looking for price to push to the upside on the US oil, what does that mean? I'm expecting the Canadian dollar to increase in value, because the Canadian dollar is a commodity driven currency. And if it's a commodity driven currency, what does that mean? It basically means that if I see the US oil increasing in value, I should start seeing the Canadian dollar increasing in value. So now when we're talking about the USDCAD, right? When we're talking about the USDCAD, okay, right? Because I'm expecting the dollar index to increase, that means I have to expect this. I'm expecting the dollar index to decline in value. That means I'll expect the USD to decline in value as well. Because I'm expecting the US oil to increase in value, that means I expect the Canadian dollar to increase in value. So that's how you can relate the Canadian dollar with the US oil and relate the USD with the DXY. So I hope you guys find this information helpful.